Hi, this is Michael Bengiat with Lifetime Investor, and this is the Stock Picks Weekend Review video for October 29th, 2022. Okay, so before we start, here is our disclaimer. You can check it out. Okay, so we're going to review the current market environment as usual. We do have one stock now in our portfolio, so we had a little bit of an improvement in the situation. And then we'll go over the stocks in our watch and ready lists. So let's get right into the stock environment. So we're still at yellow. Green would be just, full, just go ahead, full blast. Red is, not working at all. And we're just starting to get a little traction. Now, we track a lot of stocks too. And that's one of the things we're always looking for. And there's been quite a lot of breakouts that have been working. Now, some of them haven't been really tradable. A lot of stocks have just shot straight up out of the right side of bases. In fact, let me just show you really quickly. I'll just give you an example. I think like Humana. Yeah, so this is a stock that we had been on our list. I think we were in this at some point. This looks like a lot of them, even though this one actually formed a pretty decent buy area here and then just shot up. So we've seen a lot of that. I think another one is Cigna, which we had in our watch list. Yeah, you can just see just kind of came up, then started gapping. So, but these were coming out of at least bases, so we had them on our list. But, going right before this, the market was just really iffy. We didn't have any things weren't working. So that's one reason why we're not in a lot of these stocks, is just because going into this nice period here, it just wasn't working at all. Most breakouts just started to fail. We saw it over and over. We'd come out. And then we had some pretty high, there's a lot of stocks we were watching that, the opposite of this, they would have these big plunges. So the environment just wasn't good for trading. And so that's why we sort of stayed out of it. But there's nothing wrong with that. I mean, if this rally is going to work, there's going to be plenty of stocks setting up and breaking out. So if you miss the first few, no problem with that. We're always trying to gauge how is the market working and is it healthy or is it not? And up till the last 5-6 days, it was really not healthy. But suddenly it got like a shot of vitamins, and it's starting to act much better. So that's good. So let's go back. Sorry, let's go back here. Oh. Okay. So, and the other thing too, we're also in earnings season. So a lot of times stocks we liked, the earnings were just in a 2, 3, or 1 day. And so we're not trading in front of that. So between the earnings, the high volatility, just 1 day up, 1 day down, big moves, and then, gapping up on earnings. It's been a tricky market. So, but, we're just waiting and watching. So we're starting to get, to the point where we're going to start putting on some more positions because we're getting enough good action that will warrant putting more capital to work. But we just don't have a lot of setups. Even though there seems to be a lot of stocks moving, they're just not coming out of any kind of base that's really tradable from a low risk. And we don't trade, we're not bottom fishers. We're not going to buy all these tech stocks that are in just like, stage 4 downtrends. We're always trying to buy the best stocks and the leaders. Now, one of the good things, though, it's been this is a tricky market. We've come out of a really nasty bear market. And of course, there's a lot of volatility when the market is in a transition mode. And so, if you look back, or if you've been a subscriber for a while, most of the stocks that are leading this market, we've had them on our lists. Now, the fact that we're not in them is, sure, we would have liked to have been in them, but the fact that we're not is fine, because if it's going to work, it's going to work. But most of the leaders, we've had Humana and Cigna, Hearn, I think it's Hearn, or Huron Consulting, Bell Fuse. There's a whole bunch of them. They're all looking really good now. And so, our system works. But of course, when the market is bad, we're just trying to, not end up with tons of losing positions and losing capital. So, but anyways, we're starting to get a change now. If it continues, we will be there and starting to add much more exposure. Okay, so let's go ahead and take a look at the one stock we have, and that is Neurocrine Biosciences. Ticker is NBIX. So again, you can see just a lot of, this is what the market had been doing since September, October, a lot of chop. You know, we had a nice move up here, chopped around, looks like tried to come out here, break out, came to new lows, got support of the 50, shot back up, broke the 50, but ended up ultimately getting support, shot back up, you know, terrible down day here, big reversal. It's just choppy. This just chops you up. So we ended up getting in right over here, breaking above this little area here. I think I can show it. Yeah, right there. And we got in there and we finally had, it looked like it was going to be an ugly day on Friday, but reversed. We closed into new highs. Now we have earnings on, I think they're on Tuesday morning. So we'll see how this goes. We're just up 1.5%. So we'll see how it goes tomorrow. We'll look if it does trade options. We'll look at the implied volatility of that and see if, you know, that can give us an idea how much the stock may move on earnings. It does look like it has a pretty big, it can move pretty big on earnings. We'll have to be careful. So if we get a little more cushion, we'll probably go into earnings. We'll see. If we don't, we'll just have to say we might just take, depending on how it acts on Monday, tomorrow. And we may just sell some of it, hold a small portion of it, and try to lock in a little bit there. So we'll see. But it's actually really pretty well. Hopefully this has got good earnings and sales. For a biotech, it's actually got earnings and sales. That's a positive right there. Overall ratings 96, so looks pretty good. It's one of the stronger ones, and the industry group is 8 out of 197. So looks like we were able to get in this and not get kicked out so far, and we'll try to see if we can get a nice move out of it. But of course, that's out of our control. All we can do at this point is manage the trade now that we're in it. Okay, so let's go to the stocks on our growth portfolio ready list. And the first one is Hearn. This is one we've had a number of times on our lists. We've had some just real ugly reversals, things like this. I don't remember what we traded this at one point. We might have gotten out here. It's just very volatile action. And now it just came back up to the buy zone, had a final bit of volatility, and now it's broken out, I think, into all-time highs. No, not quite, but we're going back to 2015. So it's a little bit on the thin side, only trades 116,000 shares. That's a plus and a minus. The plus is that when demand comes in for this thing can just take off because there's really not a lot of shares, and it can get pushed up pretty quickly. The downside is that if some big seller appears, this can go down really very quickly. So we'll see. Again, this one's got earnings in 2 days. We're just going to have to sit this one out. This is the problem. There's a lot of them. The earnings are just last week and this week. There's a ton of companies. So, but we have an eye on it. We'll see what happens. The next one is a new one we just added, Inhibrx, and this is another biotech, and we're looking to get into it. Right breaking out above this little pattern here. So what we like is some of these stocks. This was like a $12 stock. And this one almost doubled. No, sorry, tripled. 12 to lower 30s. And what we always like to see on these moves is, obviously, these are all based off of, this doesn't have any earnings or sales, really. And so there was probably some good news on this day. But whenever you have these big moves, you always want to see what is going on here. Are there people that, were over here that have been holding it forever? Are they getting out? And you can see it's really been pretty tightly trading here, just about 10%, maybe 12%. And it's just holding up here. So whatever it is, it's not attracting sellers up here in the 30s where, here we were down in the single digits. So that's a real good sign. And we're going to try to see if we can get a break above this 3360 area. We have 3360 to 3450. We try to keep these little areas real tight so you don't buy them too extended. it's pretty volatile. This went up almost 9%, and this doesn't even look like that much of a move on this chart. So, and it's a biotech, it's pretty good volume. So, but we'll keep an eye on that one. The next one is on the ready list. That's Neurocrine Bioscience, which we just looked at. We have the position in that. And then the last one here is we have Campbell Soup, which is a defensive stock. This is what makes this market kind of tricky, because we're getting a lot of money still pouring into defensive names like this, Clorox, things like that. And really, you can just see that this money just piled in around over here. And you can see its relative strength has been pretty strong. But even these stocks, look, this is really choppy trading. We formed this nice trading here out of this double bottom. Really did a nice move up. Got a little. This was a great time to have sold into. Then it got super choppy. Formed this really faulty cup with handle. You can just see here, this handle was just too deep. It came almost down to the bottom of the cup. This is not a pattern you would trade. It's almost like it needed to form another little cup with handle here next to this one. But a cup next to a cup is really not a great pattern. So we've sort of stayed away from this, but it's it is in the buy zone, and it doesn't have earnings until December 8th. So it's one of the few you can actually get in, not have to sell in a couple days. But it's a defensive stock. You don't expect really big moves from these stocks because it is Campbell's. In terms of the long-term outperformer ready list, we don't have any stocks. We had a few, and they just did not act well at all. I think one of them was CDNS. Yeah, Cadence Design. We were trying to buy it off of the moving average, and then we had this earnings came out, and it just kind of plunged down. So we're still watching this, but let's see, was it at the weekly? Yeah, see, it's below the weekly averages. In the monthly, yeah, we're below 2. We were trying to buy it off of support here. It just didn't, there was no support, so we took it off. Let's move on to the watch list. We only have one company, and that's CF. Oh, sorry, CF, put the wrong ticker in. And they are in the ag chemicals industry. So we are trying to get this. Let's see, 108.48. Yeah, we're coming in right above this little consolidation again. So sometimes we try to buy things in the base if there isn't tons of overhead supply over here. So you can see here, let me see if I can draw the line here. It's going to be a little not exact. Yeah. Unfortunately, once you draw a line here, you can't do it again. Let me try one more time. Let me go the other way. Yeah, that's close enough. Okay, so you can see here, there's been a lot of selling has come in right around this 109, 110 area. It got a little above one day here, but it was still roughly there. Shot above here 3 days, and sellers just send it back down. So you can see we're kind of getting tighter and tighter here, right at that zone. We like that. There's not a lot of selling going on. And then, of course, we're going to try to buy it breaking out of here. Earnings are in 3 days, so we're, probably won't buy it. Just you can see there really isn't anything to buy. That's one of the problems we have right now. We have just earnings coming up. So we're going to have to stay out of this. And then in terms of the long-term outperformer watch list, we don't have anything there. Nothing is really set up. Most of the long-term outperformers have been traditionally tech stocks, and they've just been pummeled over the last year. And so there's been no support. Most of them are in sort of confirmed downtrends, and we're not buying into that. We'd much rather buy a stock, much higher, even 100% higher than what it is, because we know then it's in an uptrend than trying to bottom fish a stock. That's just dangerous. And many people this year have discovered how dangerous it is to their financial health by trying to bottom fish stocks that don't have a bottom. But what's the problem is sometimes you see things like this. It comes down right to its 200 and bounces, and that was the great buy. Here again came down. It does work sometimes, but it doesn't always. And especially in a bear market, you don't want to try to buy off of moving averages because they tend not to hold. Okay, well, that's about it for this week. We're just kind of more in a holding pattern, but the market, just wrap up, has been greatly improved from what we've seen. But we just don't have anything to buy that is set up correctly, and a lot of things just kind of took off. And just final thing is, if you've missed out, if you've been watching and you just missed out, you have to just try to do away with FOMO. There's always more stocks. Even if you go, oh, I was watching this stock for last year and it just took off, or we didn't give you a buy signal. If it's a leader, we're going to be looking for other ways to get into it. And it's not like we have to only buy out of this. We could buy when it pulls back. We can do a number of things. It might set up a number of different ways. So if we're always looking, what are the leaders, and if they are truly leading the market, how do we get in on them? If we didn't get them in a base or in somewhere breaking out, we're going to try to get in at another point. And if they just take off, well, then so be it. There's 10,000 plus stocks. There's always a bunch of leaders going on. So just try to get rid of FOMO. We're just you're trying to make money doing it low risk and not risking your capital in a silly way where you're just going to take big losses, especially in a bear market. So we have to do things intelligently, and that leads to good results in the long term. Okay, that's it for this week. We'll be back next week. All right, thanks a lot.